Good afternoon, everyone. Welcome to today's Wednesday market review. My name is Stock Darts, and we're going to do what we always do on Wednesdays. We're going to go ahead and take a look at the major market indices. Those, of course, being the S&P 500, the Nasdaq Composite, the Dow Jones, and the Russell 2000. Once we finish looking at those four and examining them, seeing what kind of state they're in, we'll take a quick look at the U.S. dollar. We'll see how it's behaving versus a couple of currency crosses we like to watch. We'll look at how it's affecting commodities like gold, oil, and silver, and also how it's affecting something like Bitcoin and Ethereum, which are basically trading like stores of value, just like gold right now. If you like what you see here, you can always follow me on Twitter under the name @StockDarts. You can find these videos under the same thing if you just search YouTube Stock Darts, or you can visit me at patreon.com/StockDarts, which is where I post weekly blog content, including trade ideas, watch list ideas, earning trades, if possible, depending on the earnings season, which we are quickly approaching, and as well as the recordings of these live market streams. That's probably the best place to go if you're looking for my content. That's typically where I'll post my trade ideas. What we do a lot of times on these Wednesdays is we try to analyze what kind of market environment we're in, and then from there I try to tailor my trades to match the market environment. That's something that's really helped me be successful as a trader over the last over a decade now, is making sure that I don't try to, I don't try to short a bull market. I don't try to go long during a bear market. And during range-bound markets, I tend to use range-bound strategies. And I found that if you try to match your trading style to what the market's giving you, you're much better off as far as trying to be successful, rather than trying to fit the round peg through the square hole by just saying, well, this is the way I want to trade, and just trying to hammer it through even if the market's not cooperating. So that's basically the point of these Wednesday market reviews, is to try to gauge where the market is and what it's doing. That way we know what kind of style of trading we want to go ahead and take. And it's been pretty similar for the last few years, because the market's been in a pretty steady uptrend with basically these cycles inside of it just basically going from one area of it to the other as capital rotates back and forth. But generally speaking, we've been in a pretty benign bull market for a while now, and as long as that continues, we'll continue to just kind of trade similar ways. But let's go ahead and take a look at the four major market indices. We're going to start off with the S&P 500 by looking at the ETF SPY. And as you can see, like I said, we are in a pretty nice bull market. We've been in the short term in a very nice rally and a very nice uptrend since the beginning of November of last year, as we started to head into the holiday seasons. For those of you that remember, last year we were looking for a holiday rally. We tend to look for one almost every year. And we got a very nice one last year, and it's so far persisted into this year. We're all the way up into April. We are heading into a new earnings season, and the market continues to climb upwards. We had a little bit of a scare in February, March, mostly March. As you can see, the market started to consolidate, but it did so within the overall framework of a nice bullish trend. And I think that's kind of the key here to keep in mind. I suspect we're probably going to correct a bit in the near future, but it's always important that you don't get too caught up in whatever the red candles are you're seeing in the short term, and you make sure that you pay attention to what's happening in the intermediate or the long term, because as you can see, we're in a pretty strong bull market. Although I suspect that we are still kind of transitioning towards a more sideways market, I hesitate to say that this bull market is done yet, and more importantly, even when we do pull back, I still think there are good buying opportunities. I think even if the market continues to shift and continues to lose momentum, I still think that these are opportunities to trade to the long side, not to try to get cute and try to short it or to try to call a top. As you can see, if we go to take a quick look at the weekly chart, you can see that we've been in a very strong uptrend. Something happened with TradingView's history, and it cut off everything from 2019 apparently. Alright, so I'm not sure what happened with this chart. Let's see if the monthly, nope. For whatever reason, all the price action prior to 2019 is off. I'm going to have to kind of go through and see if it's something on their ends, or maybe the settings adjusted or updated or something. But we've been in a very strong bull trend, and it's been a while now. And until that changes, we just have to trade to the long side, and we have to just take advantage of the bull market that we are in. Now, as you can see in the intermediate term, we have a pretty strong rally that looked like it was about to end, and it actually did a bit of that in the NASDAQ, which we'll get to soon. And we'll see, as we go ahead and analyze, we're going to go ahead and take a look, of course, at the 4 major indices and try to see if there's any changes or any kind of differences between the 4 that give us a better picture of the overall market sentiment. But I think the S&P 500 is the good average. And as you can see, the market has been rallying pretty strongly now. It's getting a little overbought. You can see we've got, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles, of which 9 are green. And the one red candle was a tiny little doji. And you can even extend it out a little bit further and say 12 out of the last 14 or 15 candles have been pretty bullish. And the bearish candles have just been inside days. So, the market has reached the point where it probably needs to pull back. There probably needs to be some profit taking, maybe a retest of the 20-day, or even a move all the way back to the bottom of the channel. But for now, as you can see, we're just riding the top of this channel as the bulls try to push the envelope and try to really see how far they can take this up before we start to lose buying demand and we start to see supply overwhelm the buyers that are left to try to chase this up. And so we may be getting there now. As you can see, the candles are getting smaller and smaller as we kind of approach that. Like I said, that means in the short term we're likely to sell off a bit. That doesn't encourage me at all to try to sell. If anything, it encourages me to wait for a dip to go ahead and try to buy. Now, if we do get a dip, what are the levels we want to watch, right? Because that's, of course, the big thing is you don't want to chase the price action. You want to wait for good risk and reward, but you also don't want to miss any dips if the momentum is picking up. And one thing that I can point out is that momentum has definitely changed, and the market psychology has changed in the short term. When we were in February and April, we were at a point where the market was flipping back and forth every couple of days between a bullish move and a bearish move, a bullish move, bullish, and then bearish, bullish, and then bearish, and it just kept going back and forth as the market forces fought trying to figure out where we were going to go next. That changed, and basically the script flipped as we started to break back above the moving averages. We found support at our bottom of our channel and the moving averages, and then as we broke out of that consolidation pattern that we were forming, it changed. And now, as you can see, we just kind of keep drifting up, and there's been no shift back and forth. However, like I said, we are probably due for a pullback, and what we should look for now is what are the first levels we want to watch. And so, because market psychology has changed, we probably don't expect to move all the way back down to the bottom of the channel or to the 50-day moving average. I think we've got enough bullish momentum in here where there are going to be buyers that missed out on this move up that are going to want to jump in early, right? So the first level is probably right here around this candle, around 408, but I think that's too high up for us to really look at as a buying opportunity. Probably if we look a little bit further down south and we look at this little area here where we had the move up last week, and last Wednesday we were looking at this little bull flag right around 406 to 405. I think that's a pretty good area. Depending on how we sell off, it could be that the 20-day comes up to meet price at that point, at which point I would expect probably a bounce and another attempt to make new highs. If we get a sharper sell-off, then we're probably going to come down to the 20, try to fill this gap here. If we do kind of fall a little bit below the 20, which, whenever we do sell, the 20 will be a little bit higher than where it is right now. But I would expect this little gap here in the 20, and then just below it around 397 to be a much stronger area of support. I would not expect us to lose 397 to 400 on our first go. If we do see a bit of a red, bigger red candle than the little green ones we're seeing right now, we're probably going to head down pretty quickly to the 20-day moving average. But I suspect we'll find buyers right at or just below the average as we come down and test the previous level. And so that's the area that I'll be watching in order to try to go ahead and reshift my holdings and look to kind of reposition myself to go long again. Those of you that were here last week, you'll know that we were looking at some sector rotation, which we'll get into as we move through across the rest of the indices. And that worked out pretty well for us so far. And I think that's the key right now, is when you're looking at something like the S&P right now. If I was trading SPY, I would not buy right now, not even close. I would probably wait, like I said, for a move back to the 20-day or even more likely to the 397 area before I'd really want to go ahead and trade it. But that doesn't mean that I'm not trading stocks at the moment, because The way the market has kind of started to behave is we're reaching a point where there's a lot of rotation back and forth between different areas of the market, and so there are areas that were offering better value earlier this week, despite the fact that the S&P 500 was still kind of holding up at highs and not really giving us good risk reward. There were individual names that were giving us better risk reward, and I think that's still the case. And what we want to do right now is, while the markets continue to kind of squeeze, underneath the surface there are names that are giving us better risk reward, as long as we go ahead and look at different themes that we could follow, whether it be looking at some of the beaten up tech names, or whether it's energy names that are starting to rebound, or whether it's small caps that have recently been pulling back, and as you can see today, finally picking up some steam with the IWM up about 2%, while the rest of the indices are mostly flat, right? And so that's one of the big keys right now, is understanding that even if the markets are looking a little bit overbought or a little bit stretched out or maybe not giving us good risk reward, underneath the surface there are areas that are giving us better risk reward. And our job right now is to try to do our best to find out where money's rotating and go ahead and take advantage of that. And I'll go over again as we go through the indices and we start to look at, when I'm waiting for you guys' chart requests, I'll go over what I've done and how it's been working out for me, or for those that follow me on Patreon. All right, so those are the key levels on the S&P 500. I don't expect too much more to the upside. Now, one thing to keep in mind is we started to see earnings last week. We had some financial names report earnings, and this week we're starting to get a bit more names to report. We come over here real quick. We're going to go to Earnings Whisper, and we're going to use their calendar. And as you can see, we've got financials that have been reporting this week. Tomorrow we've got Bank of America, Citigroup, and then a few other. The airlines are going to start to report as well. That's just before market. If we look after market, we've got Alcoa, we've got just a few different names. But as we head into next week, and we start to take a look, we'll see that we're going to start to see more names pop up on this as we move forward. We're going to start to see the list is going to start to get a little bit bigger, and it's going to keep growing until we move through the end of April. And the last week of April is going to be the big one, where we get a lot of the big FANG stocks and a lot of the bigger tech names. But as you can see, earnings season is starting to ramp up, right? That could have an impact on the markets. More importantly, that will have an impact on the way we trade. Over the last couple of weeks, most of the trades that I've looked at and most of the trades I've taken, the ones that I've recommended on Patreon, they've had an expiration date because we have earnings coming up on those names. And if you are a swing trader, someone that trades on a directional basis, you don't really want to stay involved during earnings season unless it's a longer term position that you're holding multiple quarters. Right? If it's a swing trade that you're looking to hold for a couple of weeks, you probably don't want to expose yourself to the volatility that comes with an earnings season or an earnings report. Names can easily move up 10 to 20%, which could be well beyond what you would consider for your normal stop loss. And so that's important to keep in mind. Now, I'm someone that loves trading earnings, and I love taking trades during earnings season, targeting actual earnings reports. However, when I'm swing trading, I avoid earnings like the plague because it's not part of my overall trading strategy if it's my swing trades. So if I'm holding a swing trade and I'm looking to get, maybe get a move of 10, 15, 20 points or whatever it is, if the earnings report comes and I haven't gotten my full move, I just close. Or maybe try to use some options to protect myself depending on the position. But generally speaking, I will reduce my risk into the earnings report because it's not beneficial for us to try to just hold and hope that we get lucky on an earnings report. That's not really the best way to trade. You always want to make sure you manage your risk. That is the most important job of a trader. It's not necessarily to seek out reward. It's to make sure that you aren't putting yourself in a position of danger where a few trades can basically bankrupt you. So the big key right now is keep an eye on these earnings calendars, whichever one you want to use, and make sure that if you are going to trade a name, that you stay away from its earnings report. And as you'll see as we start looking at different stocks on TradingView, it actually has a little thing that says how many days left till the earnings report. So it gives you a good idea of how to make sure that you avoid or close out those trades. And so there's really no excuse for you to be kind of caught by surprise with an earnings event. All right, so let's take a look at the NASDAQ. And this is going to be one of the nice charts that we want to look at, and one of the ones that has been really good for me, and hopefully those of you that follow, hopefully those of you that were here last Wednesday and paid attention, you'll know that we were looking at the possible rotation of capital back into tech. We looked, and I suggested several names really quickly that were likely to give us a good bounce into this week, and they have mostly paid off pretty well. As you can see with the NASDAQ in general, the NASDAQ has really taken off. Now, going back to what we were saying with the S&P 500 before, the NASDAQ was in a pretty steady trend as well, and it broke that trend. And this was one of the things that was leading me to believe the market was going to start trading sideways. That has changed a bit with the behavior out of the NASDAQ. As you can see, we've made new highs and have started to kind of ramp up activities again. Now, I don't think we're totally out of the woods as far as transitioning towards a sideways market. This was kind of the first ding to the overall environment. What often happens in these scenarios is you get a strong rally. Once the rally breaks, this is a good reason, and this is a good example of why you don't overreact and you don't try to short, or you don't get you just don't get too overly excited or overly scared about what happens in the short term, is because very often when a rally like this breaks, it just leads to a temporary consolidation, and then you get another resumption of the rally. Now, the key here is, of course, are we still exploring a new ceiling in what is going to become a broader sideways range, or is this a new leg up in the rally? And of course, there's no way to know until we see it happen. At the moment, I'm going to go under the assumption that the trend is continuing, because that's what we're seeing across the board. But I think there's a very real possibility that we will still find sellers here, and we'll come back down, and we'll still start to chop around, and we'll still start to really explore transitioning towards a sideways state. Now, it doesn't really matter to me whether we rally from here or whether we start to transition to a sideways state, because my strategy is going to remain in place. I'm going to look at it from week to week. I'm still buying dips, and I'm still turning to the long side. I'm not looking at playing it to the short side. Even if we do transition towards a sideways market, I still think that it's one that will be more bullish in nature, and it will still be more beneficial for us to try to trade to the long side. So yeah, at the moment I'm just kind of watching and seeing what happens. Like I said with the S&P 500, I think it holds with the NASDAQ. We've had a nice run, 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of the last 10 candles, what we got? Maybe 2 red candles, and they're both inside days. I think we're due for some fluctuation back in the other direction. And ideally, what we'd want to see is a move back to test the 20-day as it comes up to meet price. It's pretty far away on the NASDAQ's case, so probably more likely than not what we want is a retest of the previous level here from which we broke down. As you can see, this little area here at the top of that channel was, again, dominated by smaller candles, and then eventually once we broke, you can see the candles got a lot bigger, volatility really increased, and then volatility is starting to decrease as we come back into that range. And so it's one of the things we want to pay attention to is, will we stay above this range, which means probably more beneficial price action, less volatility, and more likely than not, stocks that are going to continue stair-stepping even as the overall index consolidates. And so the key here is whether we lose this level or not. I think, again, the short-term horizontal levels are pretty poorly defined, and it's hard to really say whether we're going to find support at this first gap around 337, or the second gap somewhere around 332 to 333, or whether we're going to come all the way down to 330. But what I expect is that the market will stall out as we approach, or as we push through new highs and come back down. And as long as it stays above 330, I think that we're going to maintain this bullish environment that has kind of reemerged in the NASDAQ and in some of the FANG names. And so real quick, let's take a look at some FANG stocks. And like I said, as you can see here, 14 days till Facebook reports earnings, right? Facebook had a huge move, made its way back up to new highs, and then it's kind of leading back down while the NASDAQ is still kind of climbing upwards. But if we look at just the FANG stocks, you'll see again, big move out of Amazon, also reports in a couple of weeks. Nice move out of Apple, maybe not as strong as the others. Also reports in a couple of weeks. Netflix should be reporting a little bit quicker than them, 6 days. So they report basically, what is that, next week? On the 20th, right? So next Tuesday. And then finally Google, which has been the strongest of the FANG stocks. And again, they report in a couple of weeks. And so we have earnings across the board. All of them have bounced very strongly into earnings season. And it will be interesting to see how they react once they have their reports. And that could be the impetus that decides which way the market wants to go, whether it wants to, whether it's going to lose momentum and start trading sideways, or whether it's going to really ramp up and start pushing to new highs. And so I think from here until then, we should get a market that's less inclined to strong moves in one direction or the other, and more likely to kind of just trade in smaller candles. Which of course means probably we don't break down below 330, and we could go a little bit higher, but I don't expect a huge ramp up higher. Now I could be wrong, and that's why I always trade based off what the market does and not what off I'm thinking. But generally speaking, I think that we're likely to remain in an environment that has smaller candles, and just basically consolidates now as we've had this big move up. So I would expect a bull flag or a small pullback. Now again, it could be a little bit different because we are starting to get a bit of a rising wedge, and this typically lends itself to stronger moves to the downside in the short term. But I would expect if we do get a red candle, like a medium sized to big red candle, it'll likely be met with buyers rather than result in a very drastic drop until we get through more of earnings season. And I think earnings season, like I said, will probably have more of an impact rather than the short-term price action we're seeing right now. Now, if we look at the Dow Jones continues to lead, and it continues to kind of be the stronger bullish index. As you can see, this channel had just a couple temporary blips as we tried to break down and go sideways, but it shrugged them off and actually accelerated above the channel, and is forming a new smaller channel just above it. These types of moves don't tend to last very long, but so far it continues to persist, and it continues to kind of hold up, and it's just wedged between that and what is likely the 20-day moving average. This was something that we also anticipated because money started to rotate back into a lot of the recovery stocks that did poorly in 2020, and I think that continues to be a decent play, despite the fact that we're seeing money rotate back into tech and back into some of the stay-at-home names. I think, like I said, we're starting to see quicker shifts back and forth because we're reaching a point where there are different pockets of the market that have different mentalities on what's going on. And so some think that this is still the best place, is the recovery names, and some are starting to think that it's a stay-at-home. And so we're seeing money rotate through both of them at the same time, just bouncing back and forth, taking a few days one way or the other. As far as the Dow is concerned, it's just like the S&P 500 right now. We've run up quite a bit, and we're likely to pull back, but I don't expect us to really pull back below maybe the 20-day. In this case, we do have a decent horizontal level, which is right here around 331, which was the previous highs that we formed in the beginning of March. Then we came back, and in the middle of March, we had a nice little bull flag there before we broke out. And that is likely to be a good area that's going to hold if we come back and fill that gap and test the 20-day moving average. And so the big key, again, like I said, is even when we start to see some red candles, I expect bullish behavior to follow them rather than it being a flip to a very bearish environment. And so that's really the key right now, is don't expect us to lose this bull trend at the moment. We're going to need a pretty bad earnings season along with maybe a bad FOMC statement during their next meeting. It's going to have to be a lot of stuff that starts to push this market back down. There's just too much pushing it upwards. Now, like I said, I think overall when we do start to see this market tire out, it will transition to sideways, not as a top. So, continue to buy and continue to play the long side. Now, if we look at IWM, this one is a bit of a different picture, right? As you can see, we're still stuck in neutral. Now, IWM led the way very sharply throughout the end of last year. And while the other indices also had this bout of volatility and this sideways action, they've been able to leave that behind, and IWM has not been able to. Now, like I said, we're seeing a little bit of rotation into it today. You can see it's up 1.7%, where the others are basically flat. Dow, the Dow up a little bit, 0.5%. This is a nice bullish move, right? We had this wedge that we broke out of. We came back, we retested, we broke out above the moving averages. What could possibly happen over the next week is that we see the other three indices kind of stall out while IWM plays catch up. And I think that would be a good way for the markets to stay taking a breather while still being productive. However, it could also be that IWM has flipped now and is really the weakest of the areas, and if that's the case, we'll see a drop right back below the moving averages and back below this 220. Now, if that happens, then it leads me to believe that the market is getting a little bit more nervous than maybe it's showing right now, which again would more than anything point out to me that we are exploring new highs really as a function of testing our ceiling rather than continuing our run up higher. And so that'll be this is going to be one of the key tests for me as far as the overall bullishness of the market is what happens with IWM. If IWM runs up to new highs or close to them, then I think it shows that all systems are go for the market to continue rallying upwards and trying to make a new leg up. If the other indices continue kind of inching upwards, but IWM loses this area and heads back down and starts testing 209, then I think more than anything that indicates a market that is going to start trading sideways, and we will likely see the other indices eventually follow suit and head back and start testing support as IWM does. So this is actually a good tell for us, is what IWM does from here. Does it make its way back up towards the 230s, or does it make its way back down into the 210 and below area? And so this will be one of the areas that I really want to keep an eye on and see what it does. Okay. Now, if we look at them, the four market indices as an aggregate, I think it's still overall a pretty bullish picture, with IWM being the only one that's maybe not as really not as powerful or as bullish as what we're seeing. And so this is going to be the one that really we want to see kind of pick up some steam. But I think generally speaking, we're still in a pretty strong market, and we want to still take our shots to the long side and just make sure we limit our risk and that we don't chase the price action. All right, let's take a quick look at the U.S. dollar. I'm probably not going to spend too much time on it. We noticed last week it started to pull back and test support, and the big key was what was it going to do there? It lost ground, and this is a big reason why the market continues to rally, actually, and why we're seeing even cryptocurrency start to rally again, and even oil. A big part of that is the dollar weakening again. It's fallen back into this range. This is pretty important because it had actually done a very good job of breaking out and stair-stepping its way back into the previous range and kind of concluding a nice bottoming formation. The fact that it made its way all the way back in here is probably not a good sign. I think overall it was not completely unexpected. There's a little bit more room to the downside before it hits really strong support around 24.50, although it may find some support around these moving averages. Moving averages aren't that important with the U.S. dollar because there's so many different currency crosses that affect it. But considering the euro is the most important one, and it mirrors pretty closely to UEP, they may kind of hold a little bit here. But as you can see, I think the big area here is right around 24.50. Now, if we look at the euro-US dollar cross, which, like I said, is the most important cross to pay attention to of euro-dollar, someone that trades the US dollar, you can see that the euro was able to make its way back above some pretty important areas here. The euro had been rallying against the dollar for quite a while before we finally had this little show of strength by the US dollar. Now, it's going to be important for the euro to maintain price action above 119. So that's going to be a very critical area to watch as far as analyzing what the US dollar is going to do. It will pull back soon, although there may be another push up for the euro before that happens. And if it can conclusively get back above its moving averages, then I think that's a good sign that the euro wants to maintain the price action up in the 120s, and that this isn't a top. It's more of a, like I said, just like the markets, the beginning of a really broad sideways trading range. And if that's the case, then it might be that 117 becomes a floor, and 123 or so becomes a ceiling. But we'll see. That's still quite kind of developing. If we look at the U.S. dollar versus the Canadian, we'll see a different picture. We'll see the dollar starting to turn right back around, and the dollar may head even lower as oil starts to rebound. Now, oil was flirting with a breakdown, and that's part of the reason why the Canadian dollar stalled out a bit versus the U.S. dollar. Um, but as we get into crude oil in a minute, you'll see that crude oil started to bounce again today, which could lead to the U.S. dollar falling back versus the Canadian. And then finally, the last one we have is U.S. Japanese yen. This is probably the most bullish chart for the U.S. dollar. Again, it did struggle quite a bit, and it's pulled back pretty significantly. However, it is coming back towards an area of support. And considering how weak the yen has been, this is probably the one spot where the U.S. dollar has the most potential for a bounce in the near future. Now, I mentioned oil. Sammy, we'll get into that in a second. That's a very nice and interesting question. I personally would probably sell, but we'll look at the chart and we'll go over that in a minute when we get to the cryptos. So crude, big breakout, and started to break and make its way back up towards the $64 area. This often happens when we have a strong trend. Once you lose the 20, you get to the 50, and they chop back and forth between the two, and eventually it resolves usually in the same direction as the prior one. However, we had the false breakdown in a couple of instances here, leading to what could have been the oil breaking down further. Now, for those of you that follow me on Patreon, you will know that we have actually been focusing on energy names for the last 3 weeks, waiting for oil to possibly bounce. We did KMI about 3 weeks ago, Kinder Morgan, and as you can see, Kinder Morgan had a very nice breakout and has done a pretty good job moving up for us. Now, it's stalled out, but it's still kind of holding, and it's still trying to make its way upwards. But it had a very nice quick move for us of a bit over $1 when we were worried about the market. Last week, we were looking at Enterprise, and as you can see again, we're watching these triangles, and it broke out above it, and it's kind of making its way up. And with oil rebounding, I expect some more follow through and a move back up towards the upper edges of its range. And then this week, the one we were looking at was Patterson, and Patterson is only now starting to break out, and still kind of breaking through this triangle. But we've been kind of hoping that oil and energy names can kind of take off here, and they are finally starting to pick up some steam as oil starts to bounce. So, like I said before about looking for areas of the market that are maybe not doing the same thing as the overall markets, I think oil is one of the ones. And with the way crude behaved recently, and the way it's starting to behave now, this is probably an area of the market that we want to continue to look at, because there's probably going to be plenty of names that are starting to kind of break out and do something very similar. I haven't looked at these today, but I'm assuming that the oil, the gas station names are all starting to do something similar. Well, got a little dyslexic there. Chevron, yeah, you can see they're all starting to kind of bounce after bottoming out. And so there's going to be a few areas that we could focus on in energy. And I'm assuming gas stations or oil names, refiners, that kind of stuff is probably going to be useful to us. Now, the other area, of course, like I said, was stuff like these stay-at-home stocks, right? So something like TDOC that finally broke out, DOCU, which these are, for those of you that maybe, if you were here last Wednesday, you'll know we went through some of these names, and I pointed out a lot of these that I really like. And TDOC, DOCU, Peloton, which is one of our Patreon trades as well. They've all shown some signs of life here as they've bottomed out and started to make their way back up. And so it's not just the energy names. Like I said, a lot of these stay-at-home stocks are doing well, and it's up to us to kind of continue looking to figure out where these pockets of strength are going to continue to kind of materialize. But those are two areas that I've been paying attention to, and those are two areas that I've been focusing on is stay-at-home and energy, and both of them have done pretty well for me. Now, let's take a quick look at gold and silver. And then we will move on to, I guess we'll go straight to the cryptos and to Doge, since Sammy, you want to look at that. All right, so gold again, I have no interest. I will continue to have no interest until I see a much bigger shift in character. Someone that's super long-term bullish on gold, maybe you want to look at this, but like I said, I'd much rather be in Bitcoin and if I am in Bitcoin and Ethereum rather than on this, and I will continue to be so. I don't see a lot that's appealing for me with the gold or silver names. Now, silver has shown relative to the gold, it's shown more strength, but it's still really not that great. There is potential upside here with a move back up into the 2450 and possibly to 2550. I don't know that I really care that much though. If you look at what Bitcoin and Ethereum are doing, I think I'd much rather be into gold and silver once we see a down cycle begin again in Bitcoin. But that's not the case yet. Now, Bitcoin was kind of worrying us a little bit. It was struggling as it was kind of dealing with these highs up here. Let's go to as you can see, Bitcoin was kind of dealing with some resistance up here, and it finally broke out. This is a nice move. Again, look at the volatility here, $3,000 move in just one day. You know, these are the kind of moves that really make crypto trades appealing. And for those of you that are in here or watching this recording, when we look at Doge for Sammy, you'll see again just the kinds of moves that we can get out of cryptocurrencies, which you know, the stock market just pales in comparison to what we can do. Now, of course, there's the two-edged sword that volatility plays in both directions. But when things are going well, you definitely want to take advantage. Now, like I said, once Bitcoin loses this uptrend and starts to come in, you know, into a down cycle, then maybe I'll be more inclined to go back into gold and silver. But for now, I'm happy kind of riding this wave. Bitcoin and Ethereum have both done wonderful things. Ethereum in particular continues to behave very well and continues to kind of climb up. Now, Dogecoin had a really big move over the last couple of days. And so, Sammy, you're asking hold or sell Dogecoin. Now, I'm always of the mind when you get, now, it's tricky because with cryptocurrencies, I'm more likely to hold for bigger moves. In a stock, if I was trading this as a stock, I would have scaled out here at 9 cents, and I would have scaled out again as it approached 10 to 12 or 13. With cryptocurrencies, I'm more likely to hold for the bigger moves. However, that being said, when you consider the fact that Doge doesn't really offer anything other than the fact that other people want to trade it, it doesn't really have any kind of utility or governance or anything of that nature, I would be pretty happy taking some off. Now, I wouldn't sell it all. Like I said, with cryptocurrencies, you always hold for the big move because these things can just go flat out insane. If you look at the last Doge move, it went from, you know, what is that, 0.007, not even 1 cent, and it shot up all the way to 3, almost 4 cents, and then eventually all the way up to 8 cents. You don't want to miss out these moves because you got cued and took a little bit of profit, right? So I would not close out my whole position, despite the fact that this flies in the face of logic when you consider the fundamentals behind Doge. I don't necessarily always try to marry myself to fundamentals. I'm someone that likes price action and trades price action. So what I would say in this case is, rather than abandon the whole thing and sell it, I would take some profits. If you look at the last time, when you get these kinds of big explosions, it eventually tires out and starts trading sideways. And what often is the best strategy in this case is you get a move up to a big level like this, and then you move some of this into another cryptocurrency that maybe hasn't moved as much. And I'll illustrate it with a couple of the currencies that I've been playing with back and forth. And so what I would do in this kind of scenarios is when you have a move up like this, maybe I sell some here at 8 cents, and then as it pulls back and I start to see buyers step back in, then maybe I flip back into it and I re-add whatever I took off. But I always want a position in something like this. I wouldn't close this out as much as I don't believe in Dogecoin, because of the strength that it's showing and the fact that there is a following there, you know, whether it's the Reddit crowd or whoever it is, there's a following that loves to pump this coin. And it actually has received some mainstream support. You know, Mark Cuban actually said that you're allowed to, you know, he's allowing people to buy tickets to his games using Dogecoin. So in a certain way, it actually is becoming a viable, currency that can be spent. And if more people follow his example and decide to let people use this, well, then you have a cryptocurrency that isn't quite as expensive or as volatile, maybe in the long run as Bitcoin. Right now, the volatility, of course, is off the charts. Um, but you might have something that turns out into a viable currency that people can spend, even if it's more of a joke, and as far as what it was created for and what it stands for. So, my advice to you is, when I see big moves like this, I tend to scale out, right, a little bit, whether it's 20% of my holdings or 30% or whatever. Now with crypto, like I said, I'm a lot more conservative because I don't want to miss out these massive 10x moves or whatever they are. Um, so I wouldn't get rid of a lot of it, but I would get rid because, like, this is a huge move. It basically doubled in 2 days. Anytime you get a double, it's always nice to kind of move it around. And so what I'm going to do is I'm going to show you an example of what I have done, and we'll do it with Polygon, the Matic coin, right? And so this is a coin that I've held for a while and something that's done really well for me. And what I ended up doing with this is I like to use this kind of stuff to multiply my holdings, and this is something that you could do with Doge. So I had a good chunk of this, around 12 cents, and as it took off and made its way back up, made up, all the way up here into the 25, and I doubled my money. What I did in this scenario was I closed out half of my trade. Now, yes, I missed out on a big move because it basically doubled from there. But what I did was I took that and I added it to other coins. And I added it to other coins that have done just as well, if not better. I went into VeChain, and as you can see, VeChain doubled just over the last week. I went into Engine Coin, which is an NFT token that I really like, and that has had explosive moves as well, right? So what I like to do in these scenarios is I try to multiply my holdings and increase my overall exposure to cryptos without necessarily closing out my entire position in the original coin. And so what I will often do in these scenarios is, like I said, going back to Matic, is when I get a double, I'll go ahead and I'll pull out 30, 40, 50%, and I'll invest it in another coin that hasn't broken out yet. Then when this consolidates and pulls back, now Matic didn't really have a nice pullback until right around here. But when it does pull back, and I didn't add in this particular case, but typically what I do is I want to add right as it starts to make its way back up. And these last couple of days is actually a good point when this thing is starting to show volatility and starting to show potential to have a new leg up in its rally and maybe break past the 50-cent barrier, which has really held it back. And so in those scenarios, then maybe I close out another coin that has really exploded. And I did something similar with the Binance coin as it took off, although I missed a big chunk of this move. But when you get these huge moves, then you pull some off of this and you move it back into some of the other cryptos that maybe haven't taken off. And so that would be my, what I would recommend with Doge is you don't have to close out the position, because why would you? This thing doubled in 2 days. It can literally double in another 4 days. But if you're starting to get uncomfortable with the fact that you haven't booked any profits on it, what I like to do in these scenarios is book profits on them and then look for another crypto that maybe hasn't had the explosive move in the last month or so, and put some of it in there and see if that can maybe play catch up while this thing, it will eventually consolidate and trade sideways. And whether that's going to happen today or whether this thing wants another big green day before it does so, it's really anyone's guess. But my advice in these scenarios is, take a little off and move it somewhere else. And then if you get a pullback and you feel like it's a good buy again, then you go ahead and re-enter. So that would be the way I would look at it. And hopefully that's, I don't know your full position. I don't know where you entered or how much you've held and how comfortable you are with this in the long term. But I find, generally speaking, that's the best way for me to use these cryptos is, to kind of play the game. But again, like I said, I don't like to get rid of my entire position on these, because the moves they give you, going back to Matic, and you see where it's gone from 2 cents or 1 cent all the way to 40 or 50 cents. VeChain, another one that was basically trading at a penny and is now trading like a 16, 17. you have Graph Token. This is another one that's been really good to me. And you look at where it was trading maybe in the 35-40 cent range, and now it's trading like at almost $2. Like, you don't want to miss this move, right? So I would say don't close out your whole Doge position, even if Doge is basically a joke. If people are buying it, then it has support. So, but I would probably use some of it to buy some of these other currencies. Like, there's a lot of good cryptocurrencies out there. As you can see, if you look over here on the right, I've got quite a few that I like to follow, and I'm holding quite a few of these as well. And my whole thing is I like to kind of branch out, and so when I have one do really well for me, I use some of those profits to add a new one, and that way I diversify while still maintaining my position in the ones that I like, and letting them run up a little bit further. Now, sooner or later, this alt season will come to an end, and a lot of these will kind of fall back down and start to lose a lot of momentum. And so the big key here is, when that happens, you have to be nimble enough to move back into either the US dollar, or just kind of hold it in Bitcoin or Ethereum. Or in my mind, I think Binance is another one that can be added to those two, and use those as your more stable options. But for now, while these all these altcoins are running as crazy as they are, just take advantage of the momentum. And like I said, what I like to do is just go back and forth and kind of ride the waves up and down as they kind of run up. Okay? So I hope that helps, Sammy. I know it's a long-winded answer, but my idea for Doge, and I actually don't have any Doge, but my brother does, and a few of my friends do, and we were actually talking quite a bit about it last night and today. And we're kind of surprised on how strong it's been, but the Reddit crowd has reached the point where they can actually pump these things pretty good, and I think that's kind of what's going on here. And to go back to what they did before with GameStop, if they have enough conviction to push something up, they will push it up. And so there could be more upside on Doge, despite the fact that it's a meaningless coin. But if it's being bought, it's being bought. I would not get rid of all of it, but like I said, me personally, I would get rid of some. Now, my brother and my friend, I don't think they got rid of any yet. I think they're happy to kind of ride the wave, but I personally feel like at this point I'd probably get rid of a little bit of it. All right, and we'll finish on that point. Unless anyone else has something they want to add, what we're going to do is real quick. Coinbase launched today, the IPO, and they're finally getting some trades in. I don't know if it's going to show up yet. No, nothing yet. But I believe it's trading around the 400s or the 300s at the moment. We'll start to. This will be a chart that I'm obviously going to add on my watch list, and eventually start trading. Once we get some price action and we can figure out exactly where it's going to be. So that's a stock I would pay attention to if you're someone that's into the crypto community but also trade stocks. Obviously keep an eye on Coinbase they just IPO'd today. All right guys, so hope I answered all the questions. If anyone has a question they didn't want to ask here again, you can always ask me on Twitter. I'm more than happy to answer you on there. You can email me, stockdarts@gmail.com, or you can visit me at Discord. Be more than happy to answer your questions there, give you any chart requests during the week if you, for whatever reason, have a question on something and don't want to wait till Wednesday. Other than that, hope you guys have a good rest of this week, and we will meet again next Wednesday.